A lot of investors are attracted to real estate because of its potential for big profits in a very short period of time. There's a house flipping show on TV that starts a program with, want to make more money in the next few months than you made all last year? Well, these shows make it look easy to quit your day job at Walmart and step into a six-figure salary where you're working at home in your underwear. While windfalls absolutely happen in this business, they're certainly not the norm. But for those willing to put in the work and able to identify opportunity, real estate is a great vehicle to make money and build wealth. So what does a good real estate investment look like? If you ask 100 different investors, you'll probably get 100 different answers. But like any investment vehicle, a real estate investment should align with your general investing goals. And if you're not sure exactly what those are or they should be, ask yourself the following 3 questions. Number 1, what is your tolerance for risk? Now, real estate it's not a sure thing. It's like any other investment. Bad things can happen. Tenants can refuse to pay the rent. Sometimes they'll trash the apartment. Rehabs can go over budget and can take longer than you expect them to. Contractors sometimes walk away with a deposit and you never hear from them again. Economies fail. I mean, we're going through that right now. Real estate in higher end neighborhoods is typically more consistent. These type of properties or these type of assets attract tenants that have higher credit scores and who make more money. They'll also produce a lower yield. They're more difficult to find at a discount, so fix and flip projects are harder to come by, and you're going to have more competition. On the flip side, properties in C and D class areas can have amazing cash flow if you find the right tenant, but your returns are one flat tire or a job loss or a funeral expense away from a total disaster. In addition, lower end neighborhoods have property values that are a lot more volatile. When the market corrects 5 or 10%, these neighborhoods can be the hardest hit. You can see changes of 20 or 30 or 50% in property values. In addition, flipping these properties can be great if there's enough margin in the deal. But a lot of times what we find is that the repair costs to get these houses ready for sale, it really is not justified because of the property value when they're ready to sell. Regardless of what your sensitivity to risk, there are markets and assets that can match that risk aversion or risk level. So the second question you should ask is, how long do you plan to be in the investment? On a long enough timeline, almost every property is a good deal. Right? That sounds crazy, but I've got landlord friends that I know that have never sold a property, ever. They believe in holding assets forever with a goal of passing them on to their kids and their heirs when they're dead. So to these type of investors, a small positive cash flow can be really lucrative as they build equity and pay down the principal on their loans. Every few years when the conditions are just right, they'll refinance and pull out a lump sum money tax-free on the property. Other people they don't have that much time. They don't have a lot of time to get the returns to kick in. So if you're somebody that's in your 50s and you're looking to retire soon, minimal cash flow in a 20, 30, or 40-year outlook probably isn't going to work. Your timeline to exit the investment is going to determine what kind of strategies are best for you. And then the third question you should ask is, how much effort and time am I willing to invest? If you have a ton of money and no time, you'll be looking for a different investment strategy than the person that has a little cash and a ton of time. There's no such thing as a free lunch. You'll have to pay with either your money or your time. Either way, be realistic with yourself and what you can put into these investments. Good investments mean different things to different people. Right now, we're about to enter a huge opportunity to create wealth in real estate. But before you start buying those great deals, make sure you know what to look for.